There is no denying the fact that the United States of America is one of the most financially buoyant and stable countries in the world. However, this wasn't always the case. There was a time when the United States was very financially unstable, and it was this dire situation that led to the creation of America's central bank, the Federal Reserve, popularly called Fed. Prior to the institution of the Federal Reserve, the U.S. economy was characterized by panics, seasonal cash shortages, and a high rate of bank failures. And many industries were either dying or just stunted due to the absence of dependable credit. So, it was obvious that something needed to be done, and different interventions were made at the time. But a central bank was something that most of America at the time was hoping would never happen. And this was because Americans did not like the idea of a central bank. They basically saw it as just copying the Royal Crown and its Bank of England, and they were having none of that. There were also worries about the entire economy being under the control of one body. At the time, America preferred for things, political and financial, to be done on a state-by-state basis, and having a central bank would not achieve that. Obviously, something gave, which is why we now have the Federal Reserve. But the Fed was not the U.S.'s first attempt at a federal bank. There were two attempts before that. Both of them were set up in the 19th century, both of them were named Bank of the United States, and both of them were closed down in the 19th century. While they existed at different times during the 19th century, the reason for their demise was the same. The political powers could not just agree on the need for a central bank. Politicians like Alexander Hamilton were all for a strong federal government and all that came with it, while politicians like Thomas Jefferson and Andrew Jackson were more about states having a lot of autonomy. So those two banks were basically destined to fail from the start. In the wake of the collapse of the Second Federal Bank, the country's financial landscape continued to deteriorate, even though there were other attempts at salvation, and things unfortunately came to a head in 1907. The U.S. Treasury had pursued some easy money policies in the years leading up to 1907 that resulted in a banking and financial crisis in 1907. Customers withdrew their monies from New York banks and trust companies in droves, and the stock market shrunk considerably. At this point, it was obvious that something needed to be done ASAP, and private banker J.P. Morgan came to the rescue. The 1907 drama was short-lived because J.P. Morgan helped steer the nation out of a full-on crash. In order to keep the banks afloat and the businesses afloat until the panic subsided, Morgan was able to gather all the major players at his estate and order all of their capital to flood the system. The fact that the nation couldn't save itself and needed help from a private banker prompted the government at the time to really consider creating a central bank, one that would actually last this time around. So from 1907 to 1913, the leading bankers and government representatives in the United States traveled Europe as members of the National Monetary Commission to observe how central banking was conducted there. They were really impressed with both the British and the German systems, so the creation of the Federal Reserve was heavily influenced by both systems, with some influences from other European countries. Finally, in 1913, the Federal Reserve Act, which established the modern Federal Reserve System, was approved by Congress. The act outlines the objectives, organization, and operations of the Federal Reserve System, and it is amendable by Congress, as has been done a number of times. Now, from all that has been said so far, it is pretty obvious that the Federal Reserve was created to stabilize America's financial scene. One of the ways that this was going to happen, and the way that it still happens, was by the Federal Reserve System enhancing the flow of money and credit throughout the nation. This way, banks would always have the resources to meet the needs of their customers. That said, the Federal Reserve's whole purpose hinges on two things: the reduction of inflation and the increase of employment. So everything that the Fed does and did is meant to result in those two pillars. As a result, the Federal Reserve was given control over the money supply, which meant that only the 12 Federal Reserve banks had the authority to print money. And the idea was that with all the nation's money coming from a particular source, it would be easy to control how much is out there. It was also concluded that to actually control inflation, the Federal Reserve shouldn't be subject to the whims of the government, printing money on demand. It had to have full autonomy, So the Federal Reserve left the Fed to its own devices, even though it was created by the government. The government would come to regret giving the Federal Reserve complete autonomy, considering that it didn't do anything to pull the economy out of the crash of 1929 and the Great Depression that followed. In fact, it is possible that the Fed kind of contributed to the problem with its high interest rates. And while there are still arguments till today about whether or not the Fed could have actually saved the economy at the time, it is generally agreed that they could have done more than they did. However, this issue was not enough to change the government's mind on giving the Federal Reserve autonomy. The Fed is still completely autonomous in that it makes its monetary policies and decisions by itself, and those policies and decisions are not subject to approval by the federal government. The only involvement that the federal government has in the Fed is in the appointment of its governors, appointments that need to be approved by Congress. Anyway, both the U.S. economy and the Federal Reserve made it out of the Great Depression, and understandably, some changes needed to be made. The biggest change has to be with structure. The structure of the Fed was basically reshaped, with powers being taken away from the 12 Federal Reserve banks and given to the Federal Reserve Board, which was also reconstructed and then renamed the Board of Governors of the Federal Reserve System. Interestingly, the Federal Reserve also had some of its powers stripped and given to the U.S. Treasury. And this became a problem when the world entered into World War II. Inflation was at an all-time high at the time due to wartime spending and rising household incomes that came as a result of increase in employment. And to fight inflation, the Fed wanted to increase interest rates, but the Treasury didn't want that because it would increase the government's borrowing costs. It was a whole thing. At one point, the Treasury actually agreed to a little increase, but not more than 2.5%. Unfortunately, this was not enough to stop the inflation from raging and the powers that be figured out that something needed to change. So in 1951, both the Fed and the Treasury signed an accord that gave the Fed free rein to do what it must to control inflation. Unfortunately, this saw the American economy struggle with inflation from the mid-1960s through the 1970s. By the early 1970s, it became obvious that continuously pumping money into the market was not working, so the Fed tried to work out other solutions. They tried wage cuts and price controls, but nothing worked and America's economy continued to perform badly into the early 1980s. But then in 1980, the Depository Institutions Deregulation and Monetary Control Act was promulgated, and it gave the Federal Reserve some really interesting powers, including the right to charge for its services and even greater control of the nation's money, that certainly contributed to the Fed finally being able to relatively control inflation. And for 20 years, entering into the early 2000s, America enjoyed a relatively low and stable inflation, a period that is now known as the Great Moderation. Between the Great Moderation and now, the Fed has had to deal with a number of other issues, including the financial crisis and Great Recession of 2008 and COVID-19, and it has managed to pull the economy through somehow. But there are still some discussions about whether or not the Federal Reserve is doing enough, with some people even calling for its elimination. And these discussions are coming to the fore now that inflation rates are skyrocketing. However, considering that the U.S. economy is now a far cry from what it was before the creation of the Federal Reserve, and also considering that the economy has managed to survive a number of serious hits since the Fed entered the scene, it looks like it has a leg to stand on and will continue to be relevant to America for a while. But there is growing pressure on the nation's central bank to go above and beyond its limited mission in order to achieve long-term price stability and maximum employment. On one hand, there is pressure for the Fed to do a better job of increasing employment and keeping inflation at bay a lot better. Allowing inflation to rage by continually pumping money and keeping interest rates low was supposed to help reduce unemployment. But it is becoming increasingly obvious that this is not working and something else needs to be done. On the other hand, there are those who believe that the solution to these issues is having the Fed involved in extra fiscal endeavors like climate change and racial equity. Apparently, taking care of these issues would help fix the inflation and employment issues. Whatever the side of the argument, it is obvious that the Fed is expected to basically perform a miracle really soon. But if we are being frank, the chances of the Fed getting eliminated, even without that miracle, are really low. The Federal Reserve will most likely continue to lead the U.S. economy for many years to come. With that, we come to the end of this video. If you enjoyed it, don't forget to hit that like button and subscribe to the channel for more videos like this. Also, hit the notification bell so that you know when next I post a new video. And I'll see you in the next one.